Gentlemen, a very warm welcome to you all. I'm absolutely delighted to have you join me today for this informative webinar on the tax changes in Portugal for 2025 and some ideas on tax efficient investment for Portugal residents. I'm Jacob Shelton. I've had the privilege of serving as a senior wealth manager for over a decade, guiding individuals just like you through the intricate maze of international finance. I work for Holborn Assets, an international wealth advisory firm who focuses primarily on expats. I'm joined today by Magalhães Barbosa Júnior. And yes, I do typically use his English name as my Portuguese isn't too much to be proud of, but he is an esteemed attorney specializing in business and tax matters in Portugal and owns his own firm. He assists business owners from all over the world in business transactions, formation, real estate, and many other subjects based in Portugal. You may have questions throughout our webinar today, and we will make sure to make time for them, as many as we can at least, at the end of our presentation. In order to make sure that you get your questions answered, please use the below Q&A button. We'll also make sure that a replay of this webinar gets sent out to all registrants and will be posted on YouTube. If you need either myself or Magellan's advice and services to look at your particular circumstance, we'll share our contact information in the same replay email to make sure that you're able to schedule a one-on-one consultation with either of us. Magellan, I know your camera is still off, but maybe we want to get started on your portion anyways, so that we can share some of these tax updates for 2025 that our listeners should be concerned about. So I'm going to go ahead and share the presentation. Perfect. And Magellan, whenever you are ready.
Thank you very much, Jacob. Thank you for Holborn for giving me this opportunity to talk with you and your and all the ladies and gentlemen that are watching us. I'm sorry for the lack of images from my side. My camera just has a mind of its own for just for sake. Okay. Good morning, everyone. Good morning, ladies and gentlemen. It's my pleasure to provide you with an even more extensive and elaborated analysis on the Portugal state budget for 2025, as approved by Law 45A-2024 of December 31st. This budget introduces pivotal shifts across a wide spectrum of tax and contribution areas, requiring in-depth understanding from both individual taxpayer and corporate stakeholders also. If Jacob, if you could turn for the first, yes, okay. We are talking about here about the minimum wage and social support index. The minimum wage, or MMG, as it's called, because it's called guaranteed minimum monthly wage, sees an increase of 50 euros, passing from 820 euros to 870. And this has an impact on financial well-being of lower income workers, and the social support index, the IAS, is slated to rise from 522 euros and 50 cents from 2025 in this matter, 2020 to 522 euros and 50 cents from the previous year, a rise of about 13 euros, such. This adjustment serves to strengthen social support programs, offering critical assistance to vulnerable segments of the population and ensuring they receive essential resources. It's much just to assure the purchased power of purchase for the lower income populations. In the second page, if you could turn it. We are dealing with tax compliance strategic sessions. It means there are some new rules that provide clarity and operational relief for businesses and individuals. The exemption of inventories, communication for all taxpayers marks a notable simplification applicable in the fiscal period commencing on or after the 1st January 2024, and this reduces administrative burdens and compliance costs. Moreover, the SAFT accounting submission for Nexus A and I of IES. IES, it's what we called corporate information simplified. It means a ton of information that businesses and corporations have to send to the tax authorities. Will be applicable for periods from 2026 onwards, providing businesses ample lead time to adapt to evolving requirements and ensuring robust financial reporting. The continued acceptance of PDS invoices as electronic invoices until 21st of December of 2025 offers in this time a pragmatic and phased approach into the transition of full digital invoicing, acknowledging the challenge some business face in immediate digital adoptions. It means you can use PDF invoices or paper invoices until the end of this the present year of 2025, and in 2026 only electronic invoices will be admitted. Let's go now to the personal income tax. Okay. There is something in personal income tax. There are some adjustments instrument. We are here only. We are talking about here in things about productivity bonuses. Will benefit from IRS exemption of up to 6% of the annual base remunerations, subject to salary increases implemented by the employer. This exemption is designed to encourage increased productivity and align employee and employer interests. Crucially, this income will be excluded from the Social Security contribution base, further reducing the overall tax burden to both employees and employers and promoting a more competitive business environment. We'll in the next we call it category A income. Category A is for the employee's income. So, it means the work income for employees. There will be a limit for meal vouchers. The limit of vouchers will increase to 70% above the cash limits, extending to the value of 10 euros at 20 cents. And then we have some influences in capital gains. It means reinvestment in pan-European personal pension product benefits from tax exclusions. It means if the employees invest in some pension products emitted by the Portuguese government and also by, I think, the European Union, there will be a benefit of tax exemptions. There will be in another page we can see several key elements. The big innovation in this with this national budget, that is the youth IRS. Just to make here a point, there is you have also the NHR, but you cannot cumulate NHR with IRS. Either you are in IRS youth IRS, or you are on the NHR. But this youth IRS, it's specifically targeted to taxpayers up to 35 years of age during their initial 10 years of income. is it's the cornerstone of this budget. It offers substantial tax exemptions to younger professionals with an exemption rate of 100%, total exemption in the first year, then gradually decreasing to 75% from the second to the fourth year, 50% from the fifth to the seventh year, and 25% from the eighth to the 10th year. This exemption is capped at 55 times the IAS, which equates to 28,737 euros and 50 cents, serving as a significant incentive. This is to retain young talent within the Portuguese economy, because as you know, all of Europe has this problem. Young talents are migrating to other countries, especially from the south of Europe, to other countries where they have better wages. So this youth IRS is a measure taken by the Portuguese government to retain those people. There is also here deductions and rates. Several key adjustments will influence deductions. First of all, the category A specific deduction is set at 8.5 times the IAS, or 5,462 euros and 15 cents, providing a baseline deduction from a broad range of taxpayers. The adjustable minimum existent value ensures a stronger safety net for low-income individuals. Deductions from overtime work have increased for the first 100 hours of work, encouraging productivity and fair compensation. Then they made significant adjustments, also evident in deductions for health, from a limit of 1,086 euros and 80 cents, education, 867.35 euros, and VAT, 275 euros and 17 cents. Here, the VAT means the current expenses on acquiring food and other essential needs. Doing that to support essential household expenses. The deduction related to disability has been adjusted to 4.16 times the IAS, offering enhanced financial assistance individuals with disabilities. This is what they presented for personal income accounts. Now we're going to the corporate income taxes, or the IRC rates. Well, there is the general rate remains at 21%, providing a stable framework for corporate taxations, but reduced rate 17% for small and medium enterprises on the first 50,000 euros of taxable income, offers a vital boost of smaller enterprises, fostering entrepreneurship and business development. The state surtax applies at varying rates, depending on taxable profit threshold. We had 3% for profits, a surtax of 3% for profits between 1.5 million to 7.5 million euros. Then we have a surtax of 5% to profits between 7.5 million to 35 millions, and 9% for profits exceeding $35 million, ensuring a progressive tax exchange. We are talking, now we go to the investment support tax regime. The FI continues to offer attractive incentives with a tax credit of 25% of relevant applications up to 15 million and 10% on any excess. This credit is simply capped at 50% of the tax liability, but may be extended under certain prescribed conditions, with a deduction period spanning 10 tax periods, thus encouraging sustained investment. Well, additionally, in another page that you can see, the deduction for retained and reinvested profits. 10% continues to offer provides a tax credit equivalent to 10% of reinvested retained profits up to a limit of 12,000 12 million euros, per taxpayer. This measure incentivizes businesses to reinvest their earnings, supporting long-term growth and innovation over a reinvestment period of 4 periods. This I could also provide additional information to Holborn and to anyone who is interested about how this actually works specifically. About the tax incentive system for business research and development, the CFID tool. This plays a critical role in promoting innovation. It offers a base rate of 32.5% of expenses encouraged in research and development, alongside an incremental rate of 50% on the increase in expenses compared to the average of the 2 previous years, capped at 1.5 million. These incentives drive continuous investments in R&D activities, enhancing technological advancements and competitiveness. It means this is really an incentive to companies that have a high added value and are investing in technology, research and development. This is to create more industries, advanced industries in technology. Now we will go to the VAT questions. Well, as you can see, these are the rates of VAT in the mainland, Madeira, and the Azores. There are the standard. You can see it's divided in three standard three rates: standard, intermediate, and reduced rates. And it's also the rates are maintained. There are no modifications or no changes in the rates. But they have some differences. In the flat rate scheme is applicable now to agricultural producers. You can see that in another page of this also. Yes, it's applicable to agricultural producers with a turnover of up to 12,500 euros, simplifying tax compliance for smaller agricultural business with a flat rate compensation rate of 6%. The reverse charge mechanism applies to specific transactions, including the acquisition of cork, wood, pine cones, pine nuts, shells, construction services. So, as I told Jacob before we started this webinar, there is a very good news for the real estate, because construction services in a construction service directed to housing, new houses for young people or rehabilitations now pay only 6% of VAT. Only pay 6% of VAT in the construction goods. And the acquisition of goods and services on the recyclable waste and scrap sector, this ensuring efficient and accurate tax collection in these areas. I will give an additional information about value-added taxes. It's regarding personal income tax, personal income for self-employed people or entrepreneurs. In 2024, you had the limit of exemption from VAT till 13,500 euros of annual income. Now it's applied to they uplifted the value of exemption, and they change also the personal income tax for self-employed people that were on 25%. They had to retain 25%. Now they only have to retain 23%. They make it even with the VAT with the rate of VAT also apply to services provided by self-employed people. It means you have, when you provide the service and you pass you send the invoice, you take 23% of VAT to the customer and 23% of income taxes. Now, with this change, you don't receive less than the value you charge your clients. Okay, now let's go to the real estate taxation, being stamp tax, property tax, and municipal property tax. We have stamp duty here. We have a nature, it varies significantly based on the nature of transaction. If we are talking about consumer credits, the rates incur ranging from 141% to 1.41% contingent on the loan term, while the onerous acquisitions or donation of real estate is subject to a rate of 0.8%. We're talking about here donation of real estate, not purchase. Leases and subleases. This is important for those who invest in renting apartments, of long-term renting apartments. It maintains at a rate of 10%. This rate of 10% is applicable to the monthly rent. Is calculated in the value of the monthly rent, not the yearly rent. It means if you have a 400 euros rent, when you register the contract, the lease contract, and to the tax authorities, you only pay 10% of the monthly rent as a stamp taxes. If it is a rent of 400%, you only have to pay 40 euros. And the guarantees are taxed between 0.04% and 0.06%, depending on the terms. About the property tax transfer tax, we have here a maximum rate of 8% for property values exceeding 1,550,000 euros. A minimum rate, it means it's an exemption. It's exempted if the value of the purchase goes until 97,064 euros. Other acquisitions are taxed at a rate of 6.5%, and rural properties at 5%. About this municipal property tax in rural properties will be taxed at 0.8%. Urban properties to 0.3, from 0.3 to 0.45, and here properties held by offshore entities, there are 7.5%. I have to inform here that the rates are approved by municipal authorities, by the town halls for something, or by the mayors. But the tax is collected by the government. That's how this municipal property tax works. About here, just now here we go to a sector specified contributions. It means some sectors that had special contributions, means like the energy sector, ranges from 0.28% to 1.45% on the value assets of our operators within the national electricity system. The contribution from banking sectors, that's on the other page, is only is applicable 0.11% on liabilities calculated and deducted from own funds and deposits covered by the deposit guaranteed fund, alongside an additional rate of 0.00030% on the notional value of off-balance sheets derivate financial instruments. Then we have also the last, it's the pharmaceutical industry, because of the high earnings and profits they had during the pandemic, and also about because of the amount of state helps and subsidies they investment they received. It ranges from 2.5 to 14.3% of total value of medicine sales. In conclusion, this is what can be considered a forward-looking budget. In summary, the Portugal business budget presents a comprehensive and forward-looking fiscal framework, incorporates notable wage increases. It's to incentive to maintain and rise also the purchase capacity for all the population. Some tax incentives strategically targeted key sectors, maintaining the contribution sectors specific, and updated some property tax rates. It's collectively underscores the government's commitment to fostering sustainable economic growth, for promoting innovation and ensuring equitable contributions from across diverse industries, thus creating a resilient and competitive economic landscape. Thank you for your attention and for your attendance, and I am ready to answer any questions you may have.
Well, and before we maybe jump on to the question and answer, and I already see that there's a couple questions that did roll in. Let's go ahead, kind of jump into my section there. Give me 1 second to get this pulled up. Okay, perfect. Well, yeah, Magellan, thanks for giving us some of those updates on the big tax changes here in Portugal for 2025. But let's talk a little bit about making sure your investments are as tax efficient as possible. Now, some of you may be wondering what's so important about tax efficient investments. Well, just imagine for a moment that you're planning a trip from Lisbon to Porto. You have two routes. One is a straight, smooth highway, while the other is a winding, pothole-filled road. Both will get you there, but one journey will be far more efficient and enjoyable. That's exactly what I'm speaking about today, finding that smooth, efficient route for your money to grow without some unnecessary bumps and detours caused by excessive taxation. But let's take the analogy a little step further. Imagine that the journey you're carrying is precious. On this journey, the cargo you're carrying is precious cargo, your hard-earned wealth. Every pothole you hit, every unnecessary detour you take chips away at this cargo. That's what inefficient tax strategies do to your wealth. They erode it bit by bit until you arrive at your destination with significantly less than you started with. Now, on the other hand, a tax-efficient strategy is like having a state-of-the-art suspension system on your vehicle. It doesn't just make the journey smoother, it actively protects your cargo from the bumps in the road. And in the world of finance, those bumps can be significant. Now, we've heard from Jill on some of the big tax changes for 2025. One of the most powerful tools in your tax-efficient investment arsenal is life assurance investment bonds. These bonds, known as in the Portuguese financial planning terminology as ICAE, are like fine wine. They do get better with age, but more than that, they're like a chameleon in the world of taxation, adopting to provide you with the most favorable tax treatment for non-NHR Portuguese tax residents or for current NHR residents planning for a future after NHR. Let's break down on how these bonds work from a tax perspective. If you hold these bonds for 5 years or less, you're still looking at that 28% tax rate on all of your gains. which is the same as the standard tax rate for capital gains on interest or income. So far normal, right? But if you hold on to them for 5 more years or more than 5 years, but less than 8 years, then this is when the magic starts kicking in. Suddenly you're paying only 28% on 80% of your gains, which really means it's an effective tax rate of 22.4%. It's like getting a 20% discount on your tax bill. Now, where it gets really exciting, if you have the patience to hold these bonds for more than 8 years, you're only paying tax on 40% of your gains, which brings your effective tax rate down to a mere 11.2% on just those capital gains. Um, Putting some real numbers to this just to see how powerful it can be. Imagine if you have a portfolio of 300,000 euros over 8 years, it grows an impressive 50%, reaching 450,000 euros. Decide it's time to treat yourself and withdraw 12,000 euros. 8,000 of that withdrawal is going to be considered a return of your original principal investment. It's just like getting your own money back. No tax to pay on that 8,000. And the remaining 4,000 is your profit. And yes, it's taxable, but remember that amazing 11.2% effective tax rate we talked about means you're only paying 448 euros in taxes off of that entire 12,000 withdrawal. Now, in a regular investment taxed at 28%, you'd be looking at a tax bill of 1,120. So that's more than double. In our example, the total tax rate on your entire withdrawal comes to just 3.7%. But wait, there's actually even more. These bonds aren't just tax efficient, they're also incredibly flexible. You can switch between underlying investments without triggering a taxable event. It's like being able to change lanes on the highway without having to pay a toll each time. Now, let's take this a step further and discuss how these bonds interact with the NHR status we discussed just a bit. If you have NHR status, you might be able to receive income from these bonds completely tax-free, assuming that they're held outside of Portugal. But remember, with great power comes great responsibility. These bonds are powerful tools, but they need to be used correctly. The specific tax treatment can depend on factors like how you withdraw the money and how the bond is structured. If you're really just putting it into the bond and it's not growing, there's really no use of the bond. You want to make sure that while the tax benefits are significant, right, they shouldn't be the only factor in your investment decisions. You still need to consider those underlying investments, fees involved, and how they might fit into your overall financial plan. It's also important to note that tax laws can and do change. We've seen this with NHR over the past few years in Portugal. While these bonds offer significant advantages now, always be prepared to adapt your strategy if the rules of the game change. In the world of tax efficient investing in Portugal, life insurance investment bonds are like your secret weapon. Used correctly, they can dramatically reduce your tax burden and accelerate your wealth growth. But like any powerful tool, they need to be handled with care and expertise. Now that we kind of looked at some of those life insurance investment bonds, let's zoom out a little bit, look at the bigger picture, your overall financial plan. Think of this as your financial GPS guiding you through the twists and turns of the market towards your ultimate destination, which is financial freedom, and particularly the option to retirement, even if you don't necessarily aren't ready for that step. Now, let's consider some key questions that will shape your journey and some of those underlying investments, even within a tool like that portfolio bond. And you'll hear all sorts of different terms for those life insurance bonds, portfolio bonds, unit investment trusts. They all really adhere to the same part of that Portuguese tax code. But as far as some key questions that might shape your journey, when do you need access to your investments? It's like planning your pit stops on a long road trip. Are you investing for a short-term goal, like buying a house for a few years? Or are you in it for the long haul, planning for retirement decades down the line? How much income are you hoping to draw from your investments? Think of this as your financial fuel efficiency. Are you looking for investments that provide regular income, like rental properties or dividend paying stocks? Or are you more focused on your long-term capital appreciation for down the road? What's your risk tolerance, which is really your financial seatbelt? Are you comfortable with the ups and downs of the stock market, or do you prefer relative stability of bonds and real estate? What are the current market conditions? It's a crazy time in this world right now, but we really want to make sure that we're seeing some of those trends within the global economy. Interest rates are historically low, although relatively due to recent history, a little bit higher, especially as we look at some of the global markets within the US and the UK. Portugal is still relatively low, though, which can mean that some of these safe fixed income investments you might want to look internationally at. But remember, financial planning isn't a one time event. It's like an ongoing process, like regular maintenance on your car. Markets change, laws change, and your personal circumstances change. That's why it's crucial to work with a financial advisor, such as myself, who can help you navigate these changes and keep your financial engine running smoothly. Um, as we come into the home stretch of our journey today, let's recap some of the key landmarks we visited. We learned from Magellan about some of these tax changes for 2025 and how they impact individuals and businesses both. We looked at life insurance bonds just real quickly, the vehicle that can drive your wealth growth while minimizing your tax speed bumps, and just briefly touched on some financial planning, considering factors like access, needs, income requirements, and risk tolerance. Remember to reach out if you'd like to set up a consultation on how to get these tax efficient structures set up for you through me, or to go over your tax situation with John to make sure that you are in the best place possible. Now is a great time to get on to the question and answers section of our presentation today. And I did already see a few come in. So I think both of these look like they might be for yourself, Magellan, so far. Let's start with Sandra. IVA/VAT at 6% for rehabilitation is general law, or the house must be located in a specific part of a city. Looking forward to your response there, Magellan. Ooh, and I think you might still be muted there.
I'm sorry, Jacob. I was still muted because I was checking here my papers.
Not a problem. Just want to make sure that you did hear that question.
I am here just trying to a certain. Yes, I have a question. I saw the question. I saw the two questions from Sandra and from Jorge Almeida. I'm still I'm just here with yeah, about the tax rate of 6% to the about the VAT. Well, it is. This is recent. This is recent measures, but it still has some certain specific applications. It is announced. It was announced as a measure from the new policy for new housing policy, but it mainly it is mainly constructed a new housing with the objective to raise the offer of houses. The reduced this reduced rate is already in place in what we call the RUA URA in English, if I may, urban rehabilitation areas. It means areas of that need rehabilitation. Then they apply the 6%. This VAT is 6% to the construction services. Then it's not yet applicable to all to all the places in a city. As Sandra very well noticed, this 6% VAT rate is only, it's applying just to rehabilitations and to areas of cities that need rehabilitation, the old and historic areas. So when you purchase a building in those areas, you for rehabilitation, you can use the services and pay only this VAT rate. I think this one. Now about the other question from Jorge Almeida. First thing, when you purchase a building in Portugal, as a buyer, you have to pay two taxes. It's the stamp taxes and the IMT, the transfer tax. It's all. Of course, there is a difference between what is when if you purchase for your home, for your permanent home, or if you purchase for another destiny. If you purchase for another destiny, it's the general tax. The general rate, it's 6.5% over the value of the building. And if you purchase as a buyer with your tax residence in an offshore, it will be applied at a rate of 10%. So if this is my advice to all investors, if you want to purchase real estate in Portugal, don't do it by an offshore vehicle. It's not profitable in terms of taxes. You will have an increase of taxes. But then we have the tax, but the rate of taxes in the purchase transferred property purchase is changeable regarding the nature and the destiny you give to the building you purchase.
Okay, perfect. It looks like the next question would be for myself. For a profit rate of 50% in 8 years, what is the normal risk factor of the investment? Really, that would be looking at, not even including compounding interest, 6.5% annual gains over those 8 years. That's really what we can expect from a balanced portfolio. Not necessarily a aggressive or growth oriented portfolio, but even a more traditional 60-40 allocation of between equities and fixed income would really be able to achieve that 50%. Again, that was just an example, right? Even with a balanced portfolio, there'll be years that return much greater than that and much less than that. So that's really part of the exercise that we take to make sure that that volatility is being addressed and that it's right for you with your comfortability levels. Perfect. It looks like the next question is up Magellan's alley. Next two
Okay,
questions.
it's from Lisandra Can. Okay, Lisandra, it is not possible to apply this for non-residents. The tax reduction IRS Jovem for people under 35 years old only applies for residents in Portugal. It does not apply for non-residents. The rules are very specific, and I said that in my presentation. You cannot accumulate the reduction from IRS Jovem with non-residents. Either you are a resident or you are not. If you're not a resident, you don't have a right to this reduction. What happens is, because why is that? Because this measure was made to keep the young people, the young Portuguese people, and it's as they are considered the most qualified generation ever in the history of Portugal, and that is true. This new generation is much more qualified than their parents and grandparents and great grandparents generation. So they created this to stop the bleeding of young immigration. From this question from Teresa Nobre, it's a very dear colleague from Algarve, where Holborn has its offices. My dear colleague here is in Montenegro. This monthly rate called for leases subleases, it's the stamp taxes is only paid when the contract is registered. Okay, it's only paid once. The 10%, what I told, the 10% rate, is applicable to the value of the rent, the monthly rent. If you have a monthly rent of 400 euros, you will only pay as stamp tax when you register the contract in tax services. You will pay only 40 euros as stamp taxes for the registration, and you won't have to pay it no more. The only thing you have to pay it if you have income from rents and subleases, then you have to pay it as if you are a normal person, as a personal income taxes, a tax that is applied a rate of 28%, we call a liberatory rate, or you can make it include in all of your income of other resources income, and then pay the rate that is in the IRS brackets. But this is not they are not applied at the end of the year. They are only applied in the moment of the contract's registration in the tax authorities. I have here another question from Lisandre. If there is another regime for non-resident young people, well, the habitual residents, like Jacob presented, is still how do I say, is still valid if you make your your registration as a non-resident, as a non-habitual resident till the 21st of March of this year. So you can benefit from the fact that you started to live in Portugal, but you do not have your permanent residence in Portugal. When I say residence, I mean tax residence. Do not make mistake of making residence as permanent residence from IMA. We're talking about tax residence. Other kind of residence is not the subject here.
Okay, well, it looks like we have just a couple more questions. One, are you able to help with the Portugal Golden Visa?
Yes.
I'm on the wealth management part of my team at Holborn, but my team does process the most Portuguese Golden Visas out of anyone in the world. So certainly happy to look at some of those options. We do have some unique figures that can start at as low as 350,000 euros for that Portuguese Golden Visa. And then, are the life assurance bonds good for U.S. expats too? And no, they're actually not. So we want to make sure that U.S. citizens keep their investments within the U.S. Also, something that I'm able to help out with, able to look at your particular situation. Please reach out after. Happy to help on that front. Um, it looks like that might be all. Any ending notes from yourself, Magellan?
Just to thank enormously to Holborn and you, Jacob, for pleasant for this pleasant evening, and my deepest thanks and my gratitude for Holborn for giving me this opportunity to speak with you and to introduce some good things that Portugal has to offer, and not just only the food and the landscapes and the drinks. We have many things here, and you see if Portugal it's a small country, has its own problems like all countries have, but it's a very nice place to live, and it can provide some very good benefits to people from abroad.
Well, we certainly don't want to discount the amazing food or beaches or everything else in Portugal either. But certainly appreciate, Magellan, you joining us on our call today. I appreciate everyone who joined. With that, everyone, have a great night.